Hi, my name is David Linton. I run the Updata business, and this is a presentation that I gave on Wednesday, the 4th of October, at the Emart Energy conference in Amsterdam. And so I'm recording this now in case you were at the conference and missed this, or indeed you didn't make it to the conference. And so we're just looking at the likely sentiment and technical drivers for energy prices in the month ahead, and particularly we're looking at European power prices, but we will look at a lot of things through the mix. A little bit about my work. I run the Updata business. I work with a lot of banks and hedge funds. I speak at conferences like this. I'm doing a lot of research work, and I spend most of my time with clients. And I've been involved in technical analysis now for nearly 30 years, in fact, and I'm professionally qualified as well. And I spend a lot of my time at trading desks, especially energy trading desks, and helping clients analyze and see the way through markets. And if you're new to technical analysis, one of the key things is that price does not equal value. And it's really why markets work. And we don't look at things from a perspective of the fundamentals. It's much more what's happening in the price. And I always start by saying to people, what's your time horizon? And daily charts are what we would look at for medium-term charts. And the daily chart is not so good if you want to know what's going to happen today or tomorrow, because that's only one more data point on the end of the chart. You would normally use a 60-minute chart if you want to know what's going to happen in days ahead. If you would use weekly charts for months and years ahead. I'm thinking in terms of what's going to happen in the next several weeks, months, and years. So I will tend to look at weekly and daily charts. But the easy way to remember this is if you want to think about what's happening in weeks, use daily charts. Weeks means months, days means weeks, and hours means days. And that's one of the great things about technical analysis. It can help you resolve these time frames. The charts that I mostly use are Ichimoku charts, and I'll explain a little bit about those, and point and figure charts. And if you watch chartstoday.com each day, I run through a list of instruments and produce those charts. And here I'm using the Updata OTC feed. You could use Trayport. It doesn't really matter which. But the long-term weekly charts are these top charts. These are really where I read the long-term picture. For the Ichimoku chart, if we're above the cloud, that's bullish. If we're below the cloud like we are on this 60-minute short-term chart, then that's bearish. So this is in fact German power a few days ago, and here we're seeing we're bullish on the long term. Medium term, we're above again, we're bullish. We've got upside targets on these point and figure targets on these charts, unique to Updata. And then we're bearish on the short-term picture, and we've got downside targets. So what this is saying is that power prices are looking good long-term and even medium-term, but short-term they're looking bearish. So that means we're going to fall before we rise, and that's the beauty of being able to resolve this for traders. We use the same principles for our morning call each morning. So if you're reading the Updata morning call, that's where you'll get these. We use these same principles to generate these reports, and you can sign up to this on the Updata website as well. So first of all, looking at markets in macro, the key thing here is we're looking at the big drivers. And when I spoke at this conference a year ago, we were looking very much at the euro stuck in this range, and the feeling was that we would probably fall out of this range to the downside. In fact, the reverse has happened. We've jumped up, but we seem to be hitting this 120 as a big resistance level. This is like a descending triangle pattern for the euro, and we see the downtrend here. But what's interesting is we've come back. We're testing that what was support was now resistance. We're testing that from the other side. So this pattern is still in train, even though we've recovered out of this couple of years of sideways movement. So the euro has been looking strong, but interestingly, we've hit that resistance. So 120 is now the really critical level for the euro and the level to watch. If we look at sterling, of course, the Brexit uncertainty is such. In September, sterling was the top performing G10 currency. So we did see a really big move in sterling, but interestingly in October that's unwinding and we're seeing sterling coming back. So it's inevitable that we will see some uncertainty. And I've said here the one certainty is uncertainty, and we are going to see uncertainty in sterling, and that's going to filter through. Expect shocks to the downside for the currency. And if we look against the euro, we see here we've been making 8-year lows. In technical analysis term, we hate new lows, so that's bad for sterling, and we are seeing sterling making new multi-year lows against the euro. So we're really seeing that keep creep in. We've got this downside target here of 98.50. That's 12% from where we are. Does suggest we'll see almost parity on sterling and the euro. US stock markets are very bullish. I know a lot of energy traders don't generally look at stock markets, but they are looking very, very bullish at the moment. And markets climb this wall of worry. We'll hear lots of people on the way up and on the run up in these markets. Lots of people saying we can't go any higher. But the reality is these markets are just looking very bullish. And so that's an environment that we need to be aware of, that global stock markets are looking pretty strong. And in fact, this is the S&P 500, the NASDAQ, the Dow, and the Russell 2000, incredibly strong performance. So the broad base of the top US 2000 companies looking very, very strong there as well. Global stock markets are bullish, so we're seeing here FTSE not making new highs, but is still looking pretty good long term. The DAX is actually just starting to nudge and make new highs. The Nikkei breaking higher on a weaker yen, stronger dollar, and the Hang Seng also still looking pretty bullish, all trending up. Watch for China and India of any signs of a black swan. There is some short-term bearishness there at the moment. I cover that each morning in my chartstoday.com. I'm looking at those markets constantly. So where is the worry that we can't see? Just keep an eye on those shorter-term charts for that. Gold is a proxy for uncertainty, and we're seeing here the gold price has actually been bullish above the cloud on the medium and long-term charts, but short-term we're pretty bearish. So we are seeing gold just coming right back at the moment. And that's, of course, if the markets are looking strong, the dollar's looking strong, then gold will invariably be a bit weaker. So getting to energy drivers, the key thing that we start by looking at is the crude price. And when I was talking at this conference a year ago, I said that $30 to $50 crude is the new normal. Well, we've gone above 50, so I'm now saying around $50. The great thing about being a technical analyst is that you can see when what you thought was going to happen is no longer true, and so $50 is a struggle for gold, for the crude price. This is Brent crude sitting in the high 50s at the moment. Having said that, the seasonal effect, what used to be the summer driving season where we'd go up in the summer and down in the winter, as we head into the winter, we will still have some seasonal pressure and shouldn't be surprised to see gold struggling to make newer highs still. And if we look at the correlation with the dollar, normally gold, oil and the dollar are negatively correlated. If the dollar goes up, crude oil tends to fall. They've been positively correlated through most of 2017, but that correlation is now kicking away. So there's no clear correlation at the moment, but we wouldn't be surprised to see these becoming negatively correlated again. Stronger dollar would put pressure on the oil price, and that would also tie in with the seasonality. WTI $50 is the key level. We've been dancing with this level quite a bit. We've got downside targets to 47.60, 48.70, so we're seeing anywhere between 3 and 5% downside. We're below the cloud on the short term. Medium to long term, we still look pretty strong on crude. WTI, we've got targets as into the high 50s, and quite a few of those targets, so that is still doable, but short term we're seeing a fall away, and that $50 we're really playing with that level at the moment, so keep an eye out for a sustained move either side of that level. US NatGas is just, is this a forever sideways market? We're really sticking around this $3 level. We have seen moves anywhere between 2 and 370, so that is significant moves. But in terms of the bigger picture, we're not really trending, and around $3 is the new normal. Here we see the prices moving before the shale revolution kicked in and has kept a lid right on the US NatGas price. But this is not a trending market, and it's really hard to see gas prices breaking anywhere until they can break out of this pattern. We just seem to be stuck in this great big range. UK gas, MBP front month. This is from the Trayport database, or ICAP in this case, and so these are all the OTC prices, and we see here that NBP has had a real resurgence in the last several weeks and is looking pretty bullish. We're bullish on the long term, we're just above the cloud here. On the medium term we're bullish, and even on the short term we're holding our own. We've got this upside target as much as 80% upside, but we'd need to break above this 60 level for that to be activated. Remember, this is a great big long-term transition, so gas prices could go quite a lot higher, and we need to move above the 60p high for that to happen. If we look at the seasonality on gas, we tend to fall quite heavily in this part of the year, so we shouldn't be surprised to see MBP falling away. This is the correlation with Brent crude. This is a 65-day correlation, so this is a great chart to have on your system. Basically, if you're running Bloomberg or Reuters, you can pull in the crude oil price in real time, and then your OTC prices from Trayport in real time, and have these correlations. And we see here very much that we're seeing that pull away. So that's really quite key there, and we do see this uptrend, but don't be surprised to see a bit of a fall away in the run into the winter. But the new year, we tend to see prices start to surge a bit, and we shouldn't be surprised to see an uptick in the price. TTF is not looking quite as bullish. We're not above the long-term cloud here, so we're still a little bit bearish. Medium term, much the same picture as MBP, looking quite good. Short term, we have been coming back a bit, and we do have this downside target of around 15 euros, so that's still about 10% downside. Long-term upside target's not yet activated. We'd need to move above this 22.50, 23 level to activate that target. If we move higher than that level, then we start to see some very bullish action indeed, and that would put us into a new long-term uptrend. So keep an eye on those gas prices. Coal prices have actually been generally rising for the last 2 years. Most people still have this downtrend of several years into 2016 hanging over us. We'd unlike to see those heady days of $220 a ton again, but we are in a rising market on coal, which is quite a surprise for many people. But having had several years of downward move, we now do have coal in an upward trending move. So that gets us to European power prices. And the key thing here about the power prices, so we start with German power, of course, the predominant contract in Europe. We looked at this chart when we looked at my matrix for long-term, medium-term, and short-term. And the long-term picture is bullish. We have upside targets as high as 43 and even 51. So massive potential there, upside 26 and 47%. Now these are long-term targets. This is not something that's going to happen tomorrow, but we can't ignore the fact that we've had these buying thrusts off the bottom that have produced these buying targets for us. We have another one here at 47, so we are seeing, sorry, 51, so we are seeing this sort of 50 euro area as quite strong potential in the long term for German power. Having said that, we've got short term, we're bearish in the short term, we're below the cloud, and we've got short term downside targets here at 33, 34 and 33, so we do see as much as 3 and 4% downside before we resume some upside. But the medium to long-term picture for German power is bullish. We look at French power. I've taken some of the lines off the chart just to make this a little bit clearer. Again, these are all OTC prices, all in real time, available in the Updata feed, and we see here that we come below the cloud, but then we've come back above the cloud, and we're bullish. And of course, you can chart all this data on Trayport into Updata. So what we're looking for is any moves above this 47.60 level. That was the high that we saw on the Nukes. If we can move higher than that, then that will be bullish for the price. So we need to keep an eye on that. Interestingly, we fell right back, but if we move higher than that level, all of these buyers start to feel good about holding their position. All those buyers are confirmed. Dutch power, as we're in speaking in Amsterdam, Dutch power looking very strong, bullish above the cloud here on all charts, and we do have quite good upside targets here as well. Seeing 43 euros is really the next stop, and then 50 euros. So we do see that going higher as well. And Italian power, we're seeing here again good strength in the Italian power market, really having run very strongly as well. Not as liquid, of course, as the other power markets, but we have got good upside targets. Interestingly, we take a look at the German power curves here. This is multi-curves and Updata, so this is monthly, quarterly, and yearly. Again, you can sit this on your Trayport data, or in this instance on the Updata ICAP feed. And we see here on the cow, we've got these downward pressure on. It's around 10% discount for power out to 2020. So really interesting that. People are discounting the future. Now, the curve doesn't mean that's where prices are going. That's just what people are prepared to pay for the future now. Now, one of the most interesting charts of all, I think this chart is absolutely fascinating. This is the German power price, and here we see that this is the price with the curves overlaid. It's a function you can use in Updata, and it's really quite powerful. So here we see German power prices falling away, and then in 2016 we hit this low, and then we start to move up, and we're trending up. And as you've seen from the previous charts, we're seeing potential to just keep trending up. All the way at the top of the market, we saw the curves all heading for higher prices into the future. And then as we got to this reversal, people are so beaten up for paying forward for power that they're just not prepared to do it anymore, which has created not much demand at far out on the curve, which is why prices are at a discount. The irony of this is that at the top of the market, the curves are going higher. At the bottom of the market, the curves are going lower. And so we see here the current curve just heading lower than the actual price. Now, I think what we will see as the prices start to move higher and people realize that they should have been buying forward, this curve will come back, and we'll start to see the curve going back into contango again. So I think that we will see the curves changing, and what that tells us is that the forward dated contracts will start moving ahead of the spot market, and so that will be really interesting, just seeing that happening. The front of the curve will actually be at a discount to the end of the curve, but it's not happened yet. But it's just fascinating to see that's what's happening, and something for anyone in the power markets to keep a very close eye on. Of course, the trade data is just truly valuable to you, and here we see this is 1 minute data going back several years. Updata has lots and lots of this data, and we see the 1 minute data going back several years, and it's really valuable to be able to take this data. And if we look at the short-term price targets, we see here that we do have these downward price targets, which we talked about, as much as 4 and 7% on German power. This is all generated from the 1 minute data, and these are really what makes the calls for the morning call as well. We're using this 1 minute data. Updata has lots of this data. We've been storing it for years, and so if you're a new user in the power markets, you can plug this data in. If you're new to Trayport, for example, you can actually stitch these data sets together on the fly. Very, very simple to do. And if we look at the rise in automated trading, we're seeing more and more clients doing this. This is one of my favorite systems. We've got over 1,000 trading systems within the Updata system, and here we see the flip-flop trading system. This is one of my favorites. So this is the equity curve of trading this strategy. So power prices have been quite volatile and, of course, falling a lot of that time. But with this strategy, you would still be making money. And if we go into the shorter term view of that chart, we see here how you're positioned short, then you're positioned long. Quite a good long trade there of a few months where you're just sitting long in the market. And so this is one of the things that we're seeing more and more, and automated trading becoming a very powerful aspect. So I end always by saying good luck. Good luck happens in uptrends. This presentation is also available in PDF. If you want to email me and ask me any more questions, feel free to do so. You can sign up to Charts Today, and you can also learn more about the Ichimoku and point and figure techniques in our training videos on our website. So why not have a look at that today? And thanks for watching.